Well, hello everyone. Thank you for being here at our session. We are here to talk a little bit about the hospitality industry in Saudi Arabia, the recent headwinds that we've been facing, and what the future holds. And we thought it'd be quite interesting to talk about it from the perspective of an operator and from the developers, and also hear a little bit about the bigger sort of master plan developments that are planned in the next sort of 5 to 10 years. Um, I guess we should start from the operator perspective with Shady, who works in Marriott. Essentially, how many sort of inquiries do you get about potential management opportunities, and what cities are the most sort of hot for you right now in terms of people wanting to build and operate and have you represent them within their hotel?
Right. Well, thank you. First of all, thank you, and it's a pleasure sharing the stage with the event. Marriott's been in the kingdom for 40 years. The kingdom currently represents the second largest market for us in the Middle East in terms of operating hotels, and the largest in terms of pipeline, with about 25 properties coming over the next 5 years. The main cities that we have hotels in right now, Riyadh is our largest market with 9 operating hotels, but across all the cities, Jeddah, Eastern Province, Mecca, Medina, these are all key markets if we look at primary cities for us. Even on secondary cities, we've got an operating hotel already in Al-Hada. We're about to enter into the Yanbu and Jubail markets. So overall, the kingdom is a very unique market proposition for Marriott, and we are operating and continue to operate across the different cities.
So in an average week or an average month, like how many people would reach out to you with a potential opportunity? And of those, how many actually convert and materialize into properties?
So majority of the leads that we get are through existing owners, which means that we're doing something right, I hope. But to put a number on it, on whether it's weekly or it's, again, we get regular inquiries across the different cities from developers, from existing owners. So to put an exact number on it, it represents our most important, one of our most important markets in the Middle East. So.
Interesting. And you mentioned secondary cities. Yanbu is certainly one that you're targeting. Are there any others?
Yes. So we're entering into Yanbu. We're with our partners, Doer, on a franchise deal. We've just signed a courtyard in Jubail with Al Majdouri Group. So it's secondary cities are important. We're also open to expand through secondary cities through franchise agreements. A lot of developers within the secondary cities have the experience, have the know-how, have existing hotels, and would like to be part of our system. So we're open to secondary cities as well.
Well, franchise is quite an interesting thing, and it's happening more and more, especially within the UAE, now more so in Saudi. How do you decide whether or not you want to have a franchise agreement or a management agreement from the operator perspective? And do you find that there's an appreciation for the difference between the two, or do people just assume that franchise must mean lower fees?
You're correct. So in the UAE, we are currently franchising, as well as in Saudi Arabia. We have our first hotel that is franchise operating with Doer, which is the Marriott Riyadh Airport. And again, if we look at franchises with owners who have the capabilities to operate hotels, have the existing operating setup, and we are open to doing it, whether in major cities in Saudi, even Mecca and Medina. Some owners have specific operating experience through Hajj and Umrah, and they would like to associate themselves with a brand, one of our brands that we have in Saudi Arabia. So we're open to this, and management agreements. So in terms of preference, our growth is important for us through both channels. There's not one specific over the other, but we would like to see more franchising, definitely.
And is there a difference for you as an operator generally? Can you make a general rule in terms of the fees you would get from a franchise versus management, or are they almost the same?
Look, each deal is completely different.
Yeah.
And again, it's becoming more of an owner's preference than an operator preference. So if it's the first investment for a developer, it's his first hotel, we would not go for a franchise. We would want to be there, make sure that we operate the hotel according to brand standards and everything else.
It makes sense. I mean, you talked earlier about secondary cities. I mean, Amaala it's a definition of a secondary city. It doesn't really exist yet. Would you like to talk a little bit about the master plan and what the overarching vision is?
Yeah, absolutely. Thanks, Ali. We're fortunate we sit alongside some spectacular projects which are taking place in the kingdom today. I think collectively as a whole, all of them are contributing to positioning Saudi Arabia on the global stage from a tourism standpoint. Amaala's got a very specific positioning in that regard. We're very focused. We're in the super luxury space. We sit about 200 kilometers south of Neom, about 200 kilometers north of Red Sea. We occupy the entire coastline of the Prince Mohammed bin Salman Nature Reserve. So just by virtue of sitting within the nature reserve, we're in a fairly prestigious location, and the coastline and setting is quite spectacular. But that in itself is just one part. The rest of it is about the development, the integrated resort that we're developing there, and the value proposition that we're creating, and it's very much focused towards the ultra high net worth individual and high net worth individual. The other projects that take place have they're larger in scale to Amaala. We're a little bit, relatively speaking, we're a little bit smaller and very focused, and our value proposition is built around wellness, arts and culture, and sunsea and lifestyle. And obviously being within the nature reserve of the Crown Prince, it carries additional responsibility around sustainability and the environment as well.
So you're looking at low impact developments. I would assume that wouldn't be traditional hotel structures, but you'd have some sort of alternate type of hospitality products contained within the master plan? Yeah,
look, the hospitality offering is quite broad within the master plan. It's the site lends itself for a very diverse offering in terms of the hospitality proposition, whether it be across sort of wellness, whether it be sports, whether it be equestrian, whether it be golf, whether it be on an island or arts and culture focus. So the offering is very diverse, but it is very much within the super luxury end of the spectrum.
So there is a significant price differential, in your view, between Amaala and Red Sea, for example?
Yeah, look, I think in terms of the ADRs that we're expecting, I'm not familiar with where the Red Sea will be positioned. I think they've got a broader, just by virtue of the number of keys that they're developing, it spans across a broader part of the hospitality spectrum. We're very focused in that ultra luxury end of the market. And yeah, certainly from an ADR standpoint, it will be at the top end of what's achieved in this region, and it will be on a global level as well. What we're developing has never been done before. It's going to be relevant on the global stage.
Of all the components that you just spoke about, I've done sort of enough feasibilities to know that usually the marina and the other elements won't be your sort of cash cow or money maker. And those will be more like attractors and anchors. Are there any other components that you expect to sort of generate the returns from the development?
Yeah, look, and then the marina is not just the only component. We've got a very large arts and culture offering, and we're cognizant of the fact to establish Amaala on the global stage that our commitment to the operators and to create that demand, we have to go above and beyond in that regard. So there'll be certain components to the resort which might not necessarily be high yielding components, and there'll be other parts from the hospitality and the residential which we will believe deliver good investment returns. So yeah, we're super excited about the overall mix. We've spent a lot of time We're working with best-in-class industry professionals across the spectrum, whether it be our master planners, our advisors in all disciplines, and yeah, very confident that what we'll deliver will be unique, and it's something that's never been done before.
I agree. The residential sounds like probably it would generate probably higher returns than some of the other components. Who do you think will be the primary target for these residences?
Yeah, look, I mean, that's a good question. I mean, without doubt, it's the ultra high net worth and high net worth individuals. I think in the early stages, it's most probably the demand's going to be from the GCC, but ultimately we are developing a project that will have appeal to the global audience. It will have appeal by virtue of the facilities that we're building, the offering, the events that are going to take place in Amaala. It's never been done before. So for your ultra high net worth globally, ultimately it will be a global audience.
That makes sense. And of the components that you mentioned, it seems like branded residences would almost definitely be some part of your master plan. From Marriott's perspective, A, do you think that branded residences would work in this sort of master plan? And B, are you sort of interested in developing branded residences in the region, or is that something that you're sort of holding back from?
No, it's branded residences are a very interesting subject, and Marriott has pioneered in branded residences since the 1990s in the U.S., starting with Florida and secondary homes. If we look at brands like Ritz-Carlton's and St. Regis's, and we have a project, branded residence project already in the Middle East, too, in Amman, and we have the Bulgari in Dubai, and definitely it adds value to the real estate developer in terms of the price per square meter for real estate, and to the destination and to the buyer as a secondary home. A destination like Amaala is definitely appealing, considering your target audience being the GCC, which the market is definitely familiar with our brands, and speak to Steve afterwards.
Yeah, makes sense. And Steve, back to you. How is progress going so far? Has any sort of groundwork started, and when do you expect to deliver sort of the very initial phases?
Yeah, look, I mean, we're working to a very accelerated program. There's 3 different master plans within the Amaala project. They're at different stages of the design cycle. The enabling works package for one of those master plans is if it hasn't started, it's starting imminently.
Mm-hmm.
That's been tendered and ready to be awarded. So I've been in the office for a week, so I don't know exactly where they're at, but it's literally days rather than months. In terms of the delivery, phase 1, it's a phased delivery. So phase 1 will be the back end of 2021,
mm-hmm.
And then through to 2028. So, but above all of that, the priority is on the quality. We won't compromise on that, and we're working with huge urgency to deliver. There's a huge ambition within the kingdom, and for us to deliver this exciting project, but it won't be at the expense of delivering quality and delivering on the overall vision.
That's fair. And I guess, yeah, one final thing. For a lot of these sort of master plans that have sort of quite grand plans and ambitions, for everyone that believes in them, there are also skeptics that think, there's no way all of it can get delivered. What would you say to that? Because in my view, it has no opportunity to fail because it's been sort of too much in the public eye and publicized and pushed, and too much money has been spent in it. Do you get people that sort of say similar things to you, that you don't think it'll happen, or are skeptical about your timelines?
Look, in terms of our vision and belief to deliver on this, it's there 110%. We've got phenomenal backing. The level of engagement from the highest level within the kingdom it's inspiring to see how passionate they are about the delivery of Amaala. And obviously it sits, like I said earlier, within the Crown Prince's Nature Reserve. So
Yeah.
this is a project that cannot fail. It will be globally recognized, and we're super excited. I'm sure there'll be people that will have experiences from other projects around the world, and they may have a view, but from the stakeholders that we have, the backing, the site, the partners that we're speaking with, the level of involvement, the contractors we're assembling, the professional teams that are involved in this project, we have everything to make it succeed. So no, we're very confident about where Amaala's heading.
And how do the negotiations with the operators go? Because I would imagine if you're negotiating with a lot of them for a very high-profile project, is that make life easier, or does it actually make it much, much harder because of the timeline?
Look, we're very focused in terms of who the partners are for our project, and it's imperative we align ourselves with operators that share our vision and understand how we want to position Amaala. And just by virtue of the positioning in the super luxury end of the spectrum, there isn't an abundance of operators that operate in that space. So.
Yeah.
The discussions we've had to date have been brilliant. To see their excitement and interest in the project is brilliant. We have some very advanced discussions. I don't believe it'll be long before we're announcing some signings. So yeah, very confident. It's a two-way discussion. It's not about us sitting at the table and imposing something on the operators, and it neither is it the operator saying it's take it or leave it. It's a collaborative effort because we're developing something that's never been done before. So it's a relationship that we're building with the operators, and you know it's a long-term relationship, and we need to achieve commercial terms that are mutually beneficial.
Yeah, it is a long-term relationship, and sometimes things are very good, and other times they are not so good. Like right now, for example, in the region, KPIs are sort of slowing down, and there's more sort of tension. At least we get the feeling between owners and operators. The argument is that they say that the operator will always take the fee, but the owner is left holding the baby. This is the oldest sort of thing that I keep on hearing over and over again, and it's it might be reasonable and it might not. What do you say when you must have experienced this yourself?
Look, it's we remain focused on working with our owners. We continue to work with our owners from day one. In the tough times and in the good times, we look at ways to optimize, create synergies, and find ways to increase their profitability. That being said, it's a long-term partnership. Management agreements or franchise agreements it's I call it a marriage, right? It lasts for a really long time, and we can always look at the flip side of the coin. When times are good, it's our fees are based on percentages. When the times are good, we all enjoy it. When the times are bad, our cash flows as well get impacted. So it's the most important thing that we continue to do at Marriott is work very closely with our ownerships. And I'd like to go back to the first statement. I said that most of our new leads come from existing owners, which is always something good to have.
Okay, so now another very ambitious master plan, not as often publicized as some of the others, but Rua Al Madinah, can you tell us a little bit about the master plan and what the overarching vision is?
Sure. Assalamu alaikum. Thank you, Ali. As we all know, Medina is the second holiest city in Islam. It's the cradle of the first Muslim society. Millions of people come every year from around the world to visit Medina and to pray at the Prophet's Mosque. As part of the Saudi Vision 2030, the government is setting goals and targets to first to enrich the experience of these visitors, to make the journey possible and available for every Muslim. They come from all walks of life, the rich, the poor, and the sophisticated and the simple villagers. So in our master plan, we are trying to make Medina accessible to everyone. So this is the overarching vision of the master plan, and when we say that, we mean to make it accessible to every visitor from the Muslim world, as well as we make Medina accessible also for every investor. We have a fantastic location. The master plan is 1.4 million square meters in a very attractive location adjacent to the Prophet's Mosque, and the idea is to develop it into mainly hotels, from the luxury segment all the way to the budget and economy, to make it, as I said earlier, available for everyone. And also the master plan is trying, or our project is trying to address the issues that Medina suffered from in the past, in the existing central area around the masjid. We have, for example, a focus on public realm. I say around 65% of the master plan is public realm. We have more open spaces. Historically, the existing hotels in the central area of Medina are located in a congested area without a lot of variety of food and beverage offerings, retails. All of these issues we're trying to tackle in the new master plan. And
if I can just jump in, you mentioned something right at the beginning. It's the master plan has all sorts of positioning, from sort of 1, 2, 3 all the way to luxury properties. How do you assess the demand and the purchasing power of potential pilgrims? Because this is something, especially for Medina and Makkah, that's a nightmare. It's very difficult.
It's a very interesting question. Thank you for that. Look, generally, demand assessment in high growth markets is very difficult,
Yeah.
in any city in the world. But and the view that we are taking in Royal Medina, and the view of the government in the Vision 2030, is to take a proactive approach to calculating or to quantifying demand, and to actually be the driver to increase the demand. So we all know the target for number of visitors for Hajj, Umrah, and Ziyarah to Medina is there is a target of 30 million visitors by 2030. Now, a lot of people say this is very challenging given the historical information. There are these any opinions, but to be honest, we think it's possible. First of all, it's not really impossible to achieve these numbers. We have experienced in recent times some difficulties with the numbers of visitors, but this is due to general economical regions or geoeconomic reasons.
Yeah, I mean, I think, the number, the quantum is one aspect of it. Yes, 30 million by 2030, but the quality of that visitation and the spending power is the second element of it. And I think when we did our initial study previously about Medina, almost none of the top 10 Muslim countries are within even the top 100 countries in the world of GDP per capita, which is, you can use it as a proxy for income and purchasing power.
And this is
So-
a very interesting observation, and it's one that we're trying to actually benefit from in Royal Medina. We see it as an opportunity. For example, we have a situation right now in the market where the demand is slowing. So the offering in Medina market is mostly in the 5 and 4 star segment. And when operators were pressured and they some business was lost. I don't want to go into the detail of why business from certain feeder markets is lost, but the operators needed to tap into new markets.
Yeah.
They target different feeder markets where, for example, the income profile is different. It's lower, and the 5-star hotels start trying to attract more people from those lower income segments, and there is this mismatch which only resulted in price wars and problems. In Royal Medina, what we're trying to say is we will have the right product for every visitor or sub-segment of the visitors coming to Medina. If we introduce more 3-star to even 1-star, albeit it's not really a defined concept yet, at least in Saudi Arabia. But and this is why, as part of our responsibility as the master developer, we are anchoring the master plan by developing at least 12 hotels in all different segments. One of the reasons is we're trying to showcase to investors what does it mean to develop a 1-star, and how is it making financial, or should make financial sense to them, what kind of quality we're talking about. And this is why we're taking the lead. So our role, obviously, as a master developer, is to develop the infrastructure for the master plan and lead the development by having these anchor assets.
And there's also a lot of residential within that master plan. I know
I wouldn't say a lot. It's what is announced in the single press release so far about Royal Medina is that we will have 500 units of residential units, and those were meant as branded residences.
Right.
More
So
for us.
we identify a market for this kind of product. Also the high net worth or ultra high net worth. But mainly the master plan is about making Medina available and accessible to everyone. So that kind of luxurious product is going to be on a limited scale. We have, by the way, our location is adjacent to a masjid, so we're going to develop 5 stars at the front row. But also the furthest point in the master plan is only 950 meters from the east expansion of Al Masjid, and that's where we intend to develop 1 star or 2 and 1 star. And even the architecture of the concept of how the hotels will be developed is going to be gradual. At the front row is going to be lower height. We are aware of the challenge because land price at the front row is much higher, and investors would like to have higher FAR if available. But also we want to be respectful to the masjid and not develop something huge adjacent to the masjid, overwhelming. And also to give also a visual and a view to the masjid to everyone. So the highest buildings will be those at the back.
Cool.
So this will make the view available also to the lower income profile kind of guest staying at the 1 star and the 2 star. And also overall in the master plan concept. We also trying to inspire the design by Medina heritage and have these components of the traditional Islamic architecture reflected on the facades. So one important thing is I talked to a lot of people about the existing central area in Medina and the architecture of the existing buildings.
Yeah.
People think they are just boxes identical to each other, and there is truth to that. So we are learning from that. We are working with the regulators closely to sort of be more lenient with the requirements, so that we can have an identity for each building and not do the same kind of cloning that we have in the existing central area right now.
One thing that you did mention was accessible and branded residences. So traditionally, branded residences obviously, associated with luxury, prestige. Now we're starting to see more and more come to market that maybe don't have that same positioning. In Makkah, for example, there's the Accor property, the Novotel, that may or may not have a residential component to it, and we're seeing a few around the region. Is this something that sort of developers are asking you more about?
So the ask is definitely there, and needs to be distinguished. Branded residences in the luxury market have a premium if you're selling a Ritz-Carlton residence. As soon as you start getting into the upscale and the mid-scale market, it becomes you're spending more to brand the residence. Will the premium of real estate sales be there or not? And it becomes more of an investment vehicle for the developer and for the buyer than a branded residence experience. So, and again, there's a lot of legislation that is still being ironed out, I'm guessing, across the kingdom, which is something we at Marriott will look at very carefully.
We have existing examples for in Mecca, for example, in Jabal Umar, there are branded residences sold earlier, based, I think, on off-plan sales. And just to clarify, Ali, the vision of the master plan, absolutely, to make it accessible to every guest, every investor, every operator as well. But when we say we have a luxury branded residence component, it's very limited scale, and developers do that for it's a cash sweep strategy kind of thing, and it's a means of financing, and there is a good market for it if it's exclusive.
Yes, for both.
And the scale of the master plan is very large. We're also mindful of the supply. How it happens should be gradual. We shouldn't oversupply the market and impact the existing hotels. We have this responsibility towards the city and the other hotels. But we strongly believe that the demand will grow, and we will pace our development in the future alongside the growth in the demand. And by demand, I mean the number of visitors. And we have seen recently the government making some moves. They announced, I think 2 weeks ago, new kind of visa for family and friends, kind of Umrah visa. And we are aware of a lot of other initiatives by the Duyuf al-Rahman program, for example, which is an assembly of different government bodies. I'm sure they will announce their initiatives very soon, but a lot is being done behind the scenes. And interestingly, I saw a tweet by Sheikh Mohammed bin Rashid about 2-3 weeks ago, talking about in 1999 when they announced the Internet City in Dubai, right in the middle of the desert. People were very skeptical. But if you have the vision and if you have the will and we are backed by PIF, by the Saudi government, and the path is clear. There is an implementation plan. There is vision realization office in every government department. So we are not worried that demand will be achieved. It's maybe not happening at the growth trajectory that is in the studies made available to everyone, but definitely it is not impossible to achieve these high numbers. And when that happens, hopefully we'll be ready to accommodate all of these visitors, inshallah.
Yeah, I think you're right. I think people always look at short-term market conditions to make 10-year investment plans, and that's where you can often get undone. So I mean, if you do have a long-term sustained growth, that's what you should be targeting, not what's going to happen in 2 or 3 years.
True.
Just in terms of religious visitation, obviously Indonesia, Southeast Asia plays a massive factor in that. Jerry, can you give us a quick brief about your team and the Southeast Asian experience that you guys have?
Yeah, thanks, Ali. Yeah, I mean, for those of you who don't know, Archipelago International, we're the largest hotel operator in Indonesia. We've 140 operational hotels currently and another 110 projects coming out of the ground at the moment. It's interesting, the discussion on demand. Indonesia is currently the second largest source market for Mecca and Medina. Hence, 5 years ago, when we sat down and looked at our international strategy, those markets were the first to be targeted.
Yeah.
We've been coming to the region for about the last 4 years, building relationships and really studying the demand curve from Indonesia, Malaysia, Brunei, and taking it step by step and looking at the pricing factor and the balance between what people don't know is 10% of the Indonesian market is quite high end. There's a lot of extreme wealth, high net worth individuals who travel with their families and friends to Mecca and Medina. And in the future, it's my opinion that these markets will really service a lot of the new projects that are happening in Saudi Arabia from the demand side, because I think if you look just at taking an example in Mecca between 2016 and 2018, visitor numbers in general, pilgrim numbers increased from 7.7 million to 8.7 million. And of that, Indonesia accounted for a third of that growth. So if you look at the increase in GDP, 5% plus growth for the last 10 years, the growing middle class there, and the differential between the structure of the pilgrims themselves or the traveller coming out of Indonesia, there's 50% of the population are under the age of 30. There's a pent-up demand for Hajj, so there's an increased demand for Umrah in that lower age bracket. It's cheaper to and easier to do Umrah, and there's a lot of demand there. And I think these facts are going to really feed into the whole 2030 vision program.
And are there any behavior traits that you find that are prevalent in Southeast Asia and not anywhere else in the world? Like, for example, a few years ago, the team discovered that not every couple from every nation would want to sleep in the same bed. Some of them would prefer twins.
Yeah, I mean, there's a few points. I suppose they like to travel in family groups.
Yeah.
So your room configuration has to be thought about, and it has to be flexible. The young population, they travel in couples, so they have a certain different demand issues in the hotel itself.
Yeah.
So we've had to really think about these things when we sat down with our partners, Warafat Hospitality in Saudi, and we're opening for those of you who don't know, we're opening our first property in Mecca next year, and we partner with Jebel Omar and Warafat on that. So we've had to really think about, the pricing has been a big issue for us to think about.
Yeah.
So we're really targeting, because it's a 5-star property, targeting that upper 10% that Christoph Rule was talking about earlier.
Yeah.
As well, distributions not only in Southeast Asia, it's across the globe is condensing into that top 10%. Yeah. And so you have to serve both, obviously all markets and all levels, but in putting these projects together, you really have to think about the different how that's going to impact. I think Rua are doing that definitely from what I'm hearing here.
Yep.
That's another thing. We often hear of brands going from west to east. You got all the guys that you would name first, but you very seldomly hear of brands going from east to west.
Yeah.
Why do you think that is, and do you find that to be sort of a challenge trying to explain the value proposition to people here in the Middle East that may not be familiar with you, even though you're well known back home?
Yeah, that's probably why it's taken so long for us to get our first hotel here.
Yeah.
And that's one of the reasons. I don't necessarily agree that Asian operators are struggling to go west. I think minor hotels, for example, is one classic example of that. But it is challenging. But clearly, when we sat down 5 years ago and studied the various markets, we didn't have an attitude of we can dominate in all markets. We took a very specific view. Clearly, our opinion, obviously, on Saudi was a no-brainer, really, call because of the demand is there.
Yeah.
But we've gone as far west as Cuba in terms of new projects. So
cool.
We're not afraid to manage on the ground in a tough environment because we're 20 years established in Indonesia, and we started there when there wasn't any wealth really, and have worked in a very difficult market really over the last 20 years, and seeing that market grow and adapt their systems, whether it be training staff or in terms of the standards and systems and technology in particular.
Yeah.
And that's really why we can operate in these more difficult, less known markets, if you like.
Okay. Well, I mean, I've run out of time and been kicked off stage on every single panel that I've done, so I think we have a chance here. Would you all like to say any final sort of closing remarks, just so that everyone can remember? I would start with you, Shady.
Well, Saudi Arabia remains a very important market for Marriott International. We believe strongly in Vision 2030, projects like Amaala, Madinah, and the Red Sea, many more, and we are committed to continue growing in this very exciting and unique market.
And Ahmed?
Thank you. I'd like to say that we have a great opportunity in Royal Medina. I welcome every potential investor, operator, designer, construction contractor, anyone basically who is linked and working to support the hospitality industry to please approach us. And I think we have a place for everyone.
Everyone's going to start chasing you now.
I don't mind that.
Steve?
No, look, very much the same. I think the message is consistent. The opportunity in the Kingdom of Saudi Arabia is huge, and Amaala in particular. We're very focused. Our value proposition is very clear.
Yeah.
We're very much in the super luxury end of the spectrum, and we're looking to align ourselves with best-in-class service providers in that regard. And yeah, very excited with the people we're already working with, and we're constantly in the market looking to work with new people that are innovating in that space as well. So, yeah.
Yeah, I think we've spent the last 20 years, last 15 years in particular, building up our technical capabilities to operate in markets like these. We're very, very excited about Saudi Arabia and what's happening there, and clearly the demand is in Southeast Asia, in Indonesia and Malaysia and Brunei, and we have the reputation there and brand equity there, more importantly, to be able to service the pilgrims and tourism markets coming from Southeast Asia. We're looking forward to it.
Thank you. Well, thank you all for your time and attention, and I believe the next thing will be the operator pitch. Thank you.
Thank you.